Hey, welcome to Coach's Corner. I'm Tim, your loan partner.
I'm Nathan, your mortgage coach.
We're glad you've joined us today. We're going to be talking about affordability and what does 2026 look like this year? Is it going to be better? Is it going to be worse? Is there going to be more homes? We need you to grab your magic ball, rub it, or whatever you got to do,
the 8 ball,
and tell us what we might see coming up this year.
Great question. Affordability. Affordability is always a worthwhile conversation. Certainly, we're seeing interest rates improve, right? We're seeing things get what we would consider more affordable from a financing aspect. As far as what crystal ball, the ups and downs are a constant in this business, and so especially when you watch the talking heads on media, and I hate to tell you, but they're usually at least days behind, if not weeks behind, what the actual market's doing. And a lot of times the market's already priced in what it anticipates anyway. So key is, though, in 2026, our general outlook is that things will be more affordable. Now, the trap is, as things get more affordable from a financial standpoint, whether that's increases of income, through various breaks and different things that are going on in the economy, or it's reduction of interest rates through an influx of cash into the bond market, we're going to the tough part is housing is what it is, right? Housing supply is what it is. Housing uniqueness. Every home. There's no two homes that are the same because they can't be built on top of each other.
Right.
So that's the tricky part about affordability. Is it really comes down to, do you have a strategic plan that fits your family's goals, dreams, and resources? And that strategic plan that we build, and not to jump right into this, we call it a smart homeownership analysis that we provide when we have you pre-approved, and we walk you through it, and we say, okay, what's the strategic plan around you finding the right home at the right price, right location, for the right reason.
Right. Yeah, I think one of the challenges is we see the talking heads, we see the Fed making the decisions that they're making, and that's more of a global, universal type of a thing, but that may or may not affect your particular set of circumstances immediately. And even, the Fed cut interest rates, so obviously tomorrow the interest rate will be much lower, right?
Yeah, so the Fed controls sort of they don't control mortgage rates. I jokingly, in the last couple of years, I call them so much as the kissing cousins. They're the cousins to each other between mortgage bonds and the Fed rate, which is the rate at which banks really borrow money from each other or the Fed itself. Right. And so that's really what they're controlling. So sure, if the Fed's going to charge less for banks to borrow from it or each other and set that bar lower, then they're going to have either greater profits as institutions, or they're going to have an ability to pass on a lesser cost.
Well, and without getting into too much of the weeds and specifics, because again, it's not necessarily pertaining to your particular situation, because even with some of the folks that we've been working with recently, we've seen a wide range of interest rates that they have available to them through different strategic plans and means, where maybe they're buying down their rate, or maybe they're...
Well, and no, you make a good point. So there is no single loan that is made the same. The interest rates that you gain access to as a borrower in the mortgage realm and home finance, there's 15 different things that can kind of, it's like Plinko on The Price is Right. It's that little chip that goes ding, 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 that make up what you have access to. So as a believer of control what you can control, there are strategies that we can employ before, during, and after that help you qualify better.
But Coach, I went to my bank and I told them I'm looking to buy, and they pointed to me, the guy to the desk in the corner, and he told me that my payment would be X and my interest rate would be X, and I was just supposed to sign on the dotted line.
Yeah, I mean, if you're up for that take it or leave it approach, that can be what a lot of people have done, right? It's not our style. Our style is, again, back to being that guide for you. We're not, and I don't say we're the guide because we're blazing the trail ahead of you. Certainly we have the knowledge to do that, but you're the hero in your story. Your success with money and your family is yours. And so we're here to guide you to that success. And to do that, we're going to show you always multiple options, multiple rates, multiple ways, multiple approaches, and then we're going to help you weigh the pros and cons. And every once in a while I get somebody who's done a lot of that research online with the best they can. You know, the internet's a great source of information. It's not necessarily a great source of education. And it certainly isn't the guide that a coach can be, right? Somebody who's, you know, got the experience of helping thousands of families navigate these things. And so the best way to do that is have choice, right? Power of choice, you know, without confusion, you know, because we want to provide clarity with certainty, not simply confusion, because it can be confusing, and that's our job. And the beautiful thing is we found that 8 out of 10 of you really want somebody to guide them. No matter, this isn't a question of your knowledge. I have people that, I mean, I practically hire them. I'm like, man, you need to come and work with me. They're so knowledgeable that still appreciate and value having a guide. Or I have some people, they're like, you know what? I don't even know the questions to ask, Nathan. I have no clue where to start. And they love the guidance and the coach approach just as well.
Right. So within that coach approach, then it's pretty simple. You're going to open up a file.
Yeah.
You're going to have a consultation to see what are the needs of my particular family and goals. And, okay, are my kids about to head off to college, or are they already graduate? Like,
yeah, we ask questions that nobody else asks. You spend 10 minutes on the phone with us and an hour with the guy in the desk in the corner at that local institution. 10 minutes with us, we're routinely told, wow, okay, you've asked me things and got me to think about things that are far more important to me as a buyer than the guy who just wanted my name, rank, and serial number and spit out, I you know, like a guy or gal. But I call it like the Mick mortgage experience. You know, McDonald's serves a purpose. Nothing against McDonald's. I eat way too much McDonald's, by the way. Got to work on that. But it serves a purpose. I can go in and I like literally under 5 minutes have the meal and be back on the road and whatever I need. But your home finances deserve better than a cheeseburger from McDonald's. You deserve better than a Mick mortgage. You deserve a coach.
Right. And this is going to be a multi-year commitment that you're going to make.
Yeah.
That's why we want you to have a budget. We want you to be successful.
A burger for the next meal.
You know, right. And so to come in and have that strategic plan put together and then someone to walk alongside you as you execute that plan, it does give that clarity and with the certainty of, hey, we're going to actually get to the closing table, be able to sign the paperwork, and then get the keys to our new home.
And you'll conquer affordability. You know, back to the topic of this little segment, affordability is relative to the planning and the strategy you can build around it. Because let's face it, we all need a roof over our head. And there's been times where affordability meant that it was the wisest thing to keep renting. And I've made those recommendations for people who just had really rock bottom rent and they had other things in their finances that it made sense for them to tackle those before they buy. We're part of that. You don't have to figure this out alone. We will come alongside you together, and we know that we help enough people get what they want with success. It's why we have 3 generations of clients now in over 25 years sending us their children, their grandchildren. I'm starting to see some great-grandchildren in certain circumstances work with us because they realize we're a guide for their success. We've helped them be successful, and that's why we're here.
So as we wind it down as briefly as we can, it's January right now. Rates are where they are.
Yeah.
And I go ahead and I go through the process and I purchase, and let's say I close in February, but by October, September, November, boy, rates have really, really dropped.
Yeah.
And now I'm stuck for 30 years with the 6% or whatever that number is.
Yeah, so that's the great news. You know, you may or may not know this, but we can help restructure that financing through our refinance. We meet people with various opportunities to tap into their equity without, you know, maybe it's better to keep the loan they have in place. We do what's called, at that point, it's a smart cash flow analysis. for those that are already in a home. And we come alongside you there and we help analyze, does this or does this not make sense? If it doesn't make sense right now, then what does that strategy look like? When is the right time ripe if the market should shift? And that's something that we have tools and resources and experts that we invest in so that you don't have to have all those fingers out there in the marketplace trying to figure it out alone. Again, once you have a coach, for better or worse, we're kind of in your corner. So, come on, Rocky, let's go.
All right. So if I want the coach approach, what do I do?
Well, you just give us a call or shoot us a text. Honestly, it's very simple. 314-551-9587, or check us out online by going to benchmarkmidamerica.com.
Hope you've enjoyed the Coach's Corner. I'm Tim, your loan partner.
And I'm Nathan, your mortgage coach.
Have a great day.
Bye.
Hey, welcome to Coach's Corner. I'm Tim, your loan partner.
I'm Nathan, your mortgage coach.
We're glad you've joined us today. We're going to be talking about affordability and what does 2026 look like this year. Is it going to be better? Is it going to be worse? Is there going to be more homes? We need you to grab your magic ball, rub it, or whatever you got to do,
the 8-ball,
and tell us what we might see coming up this year.
Great question. Affordability. Affordability is always a worthwhile conversation. Certainly, we're seeing interest rates improve. Right? We're seeing things get what we would consider more affordable from a financing aspect. As far as what crystal ball, the ups and downs are a constant in this business. And so, especially when you watch the talking heads on media, and I hate to tell you, but they're usually at least days behind, if not weeks behind, what the actual market's doing. And a lot of times the market's already priced in what it anticipates anyway. So key is, though, in 2026, our general outlook is that things will be more affordable. Now,